Hey, it's Brian over at Cross Country. Hope you're having a great start to your week. Hey, I wanted to share some information about 401ks, retirement accounts basically, and down payments when you're buying or financing a home. We had a client that was supposed to close within 30 days of when they had acceptance on their real estate contract, and they decided that they wanted to take a loan out against the 401k that they had with their employer versus using the cash that they had saved, which is totally fine, except that it takes time to do that. So what I want you guys to understand is you've got a couple options. So if you're considering buying a home and your down payment money is going to come from your retirement account, let's just say that it's a 401k with your current employer, you've got two choices. You can either take a distribution or you can take a loan against that. A distribution is the way that I typically don't recommend for most people. It causes a taxable event, and depending on your age, typically there's an early withdrawal penalty, which when you add it all up with taxes, it's like a 35% fee. So if you need $10,000 to buy your house, you basically need to take $13,500 out of that account in order to get $10,000. So it's very expensive for you to do it that way. The better way for most families is to take a loan against the retirement account. So every 401k plan administrator has different rules around what can happen with the loan. Most loans most 401k plans will allow you to take money as a loan against your retirement account for a hardship withdrawal or a hardship loan. And what qualifies as a hardship is for you buying a house. So if you're buying a home, you can use a loan against your retirement account in order to do that. A couple nice things about that is when you're paying the loan back, you're going to be paying it back with your pre-tax income. So you're going to pay it back with money before your tax, which actually helps you. So it'll increase your retirement account balance over time when you pay that loan back. So it's actually you paying yourself first, which is a good thing. Now, here's the issue. It's going to take time. So when you call your 401k plan administrator and you say, hey, I want to take a loan against my account, they're going to say, okay, no problem. Here's how much you have as a maximum, and then you'll tell them how much money you want to take. So what will happen is once you complete the paperwork and file that with them, they can process it usually pretty quick, within a day or two, maybe a week at the most. Once they process the paperwork, 9 out of 10 times they're going to physically send you a check, like a written paper check they're going to send you. They're not going to wire the money to you. They're not going to wire the money to the title insurance company that you're going to close at. So it might take about a week once they cut the check and get it to you. And then after you get the check, you have to go deposit the check. And if it's a large deposit, which it will be most of the time, considered a large deposit by your bank, when you deposit that check in your bank account, the bank is going to put a hold on it until the check clears their account, and then the money will be available to you. This is super important to understand. So let's say that you talk to your plan administrator and it takes 2 or 3 or 7 days to get the paperwork completed. So let's say it takes a week there. Then it takes another week for you to get the check in your hands. Then you go and deposit it immediately, let's say, and then it might take another week for it to clear your account. So now we're at about, give or take, 3 weeks before I would actually be able to document your deposit and your down payment funds. And that's very, very important. So like this client that I mentioned that wanted to close within 30 days, they were not able to close within the 30 days, not because we couldn't get the loan closed on time, but we couldn't get the file clear to close because we couldn't document their assets because it took so long for them to get the money from the 401k deposited and get it to clear the bank account. So if you have if you're thinking about buying a house and using your 401k as the down payment source, please talk to us up front before you go put a home under contract, especially in the market that we're in right now. Is as competitive as it is with multiple buyers on almost every home for sale. You don't want to be in a situation where you're under contract, you finally get that deal under contract, and then you have to ask for an extension to your closing date, and there's 10 backup offers. Don't think that the seller would not be interested in taking those backup offers if those buyers were more prepared. So we want to make sure that you document your assets up front, and if you're using that 401k loan, we want to make sure you have enough time to get the money in your account so that when you find the right home, we can close on time and make sure you get the keys to that home. If you have any questions, don't hesitate to reach out to us. I'm happy to discuss any scenarios or answer any questions for you regarding anything related to your 401k and a loan against it for down payment. Give us a call, 847-603-4778.